More than 80% of the traders who are watching this video right now might not be able to trade in option segments if SEBI implements this new rule. So let's see what SEBI is trying to do here, and if you are an option trader, how this new rule is going to affect you. So Money Control published an article yesterday which states that only one weekly options per week is available for any of the exchange to choose, and the minimum contract value will be increased from 5 lakhs to 30 lakhs. So what does this mean? So first let's understand what does this increasing the derivative value from 5 lakhs to 30 lakhs means. See, currently Bank Nifty lot size is 15 and it is trading around 52,000. If we multiply that, the current contract derivative value is approximately 7.8 lakhs. So SEBI is suggesting to increase this current minimum value from current size, whatever the size, to minimum 30 lakhs. So they wanted to increase 4 times or 5 times. So which means that if the new value has to be around 30 lakhs, then what it means that the current lot size of 15, the current quantity of 15 will be moved 4 times higher. So from 15, the new lot size will be 60. So which means that going forward, if you are trading with 1.5 lakhs of margin that is required to trade one lot, going forward it will be approximately around 6 lakhs. It will be increased 4 times. So you need to put in additional capital to trade the same one lot quantity. But earlier you used to trade only 15 quantity, now it will be 60 quantity. So the minimum quantity that you can get started itself will be 60 quantity. So this is the new proposed change that SEBI is trying to implement for all option traders. So the next rule is only one weekly options will be allowed per exchange, which means that currently Nifty is having Fin Nifty expiry, mid cap expiry, and then Bank Nifty expiry. All these expiries will be removed. The NSE should have only one expiry, so they need to decide which expiry they can run. So soon these exchanges, BSE and NSE, will come up with only one expiry per week. So if you're someone who's been trading with Monday to Friday with different expiries, then that might not be any more applicable going forward. And also we have been seeing a lot of spikes that used to happen because of these daily expiries that tend to come, right? So these spikes might also tend to go down. And the next rule that they have suggested is to reduce the number of strike intervals that we have. For an example, if you see in Nifty, it will be in intervals of 50. So from 25,000 it will be 25,050 and 25,100. So these number of strikes may also be reduced. So currently we have some 30-40 different strike levels, so that will be compressed totally. So let's consider this example. See, currently if you are an option buyer, let me explain how this new rule will drastically affect an option buyer. If I'm an option buyer and I'm trying to trade with one lot, where currently Bank Nifty is at 52,000 and 52,000 CE, which is trading around 250 rupees. Consider that as an ATM option. So in order to buy this one lot, I need to give just 3,750 rupees. So around 4,000 rupees is enough to trade this one lot of option buying. And as an option buyer, if I wanted to risk, I do not want to risk more. I wanted to risk only 1% of my capital in this trade. So I'll consider 4 lakhs as my capital. Out of 4 lakhs, if I'm risking only 1%, then even if this option goes to zero, I'm going to lose only 1% of my capital. Correct? So now SEBI is increasing the lot size to 4 times, which is the current quantity from 15, it will be increased to 60. So the same one lot, after the new rule, if I buy, then my risk per trade increases from 4,000 rupees to 15,000 rupees, because I cannot trade below 60 quantity. I can only trade minimum 60 quantity. So in this case, my risk per trade is around 15,000. So if I use the same capital of 4 lakhs, then my risk per trade increases from 1% to 4%. So what should I do in order to keep the risk per trade minimal at 1%? I will be increasing my capital from 4 lakhs to almost 15 lakhs. So if I increase from 4 lakhs to 15 lakhs, then it shows that my risk is still at 1%. So as an option buyer, who trades based on this risk management principles, if they have to continue with the same kind of risk per trade, then their capital has to be increased. Otherwise, their risk per trade will be increased. So one more thing that we need to check in this money control article is SEBI chairperson has clearly mentioned that if you see, we are entirely data driven. If that's what needs to be done and that's what the committee recommends and we agree with the logic, definitely we will do it. So as per the SEBI, if they go and check their overall data and if it concludes that most of the people who are losing money in the markets are the people who are trading with lower capital, definitely this new rule will be implemented. And how are they going to find that out? I'll explain that. Because SEBI is the one who has clearly stated that 9 out of 10 traders who have been trading in F&O are losing money, right? So they have the right data sets. But if there is one more data which gets published by NSE, so let us look into that data and let's see in complete detail about it. So this is the NSE data that clearly shows how many number of people are trading in what kind of turnover range. If you see, there are three different columns: March, April and May. So month on month, overall total premium turnover with respect to option segments is shown, and the next column is the number of unique investors in each of the category. So you directly go to this May 24, and in May 24 you just check the total premium turnover and the number of unique investors and what is the overall share percentage with respect to each and every segment. So the turnover range, if you see, less than 10,000 rupees is the overall option turnover. The number of people who do that is almost 8,98,000 people. So these are the number of people where their overall turnover in option segment is itself is less than 10,000 rupees, which is way lesser. And the next segment between 10,000 to 1 lakh, if you see, almost 11,74,432 people are trading with a turnover of less than 1 lakh. That is approximately 25% of the people. And if you move to the third segment, between 1 lakh to 10 lakh turnover, how many people are doing it? And that is additional 14 lakhs. So altogether, this 14 lakhs plus 11 lakhs plus 10 lakhs, almost 35 lakhs of people are trading in options with a lesser turnover. So people who normally do this lesser kind of turnover are the people who trade with a lesser capital, obviously who trade into options buying. And that is why SEBI says that 9 out of 10 people are losing money, because these people who are trading with a lower turnover are contributing more than 50%, almost 60% of overall share percentage. If you see, add all this 31 plus 25 plus 20, so which is approximately 55 plus 65, 75. So almost 70 to 80% of the overall volume in NSE is coming from this number of people who are trading with a turnover of less than 10 lakh. So the rest of the people who are trading with 10 lakhs to 1 crore or 1 crore to 10 crore or greater than 10 crore, if you see, it is just around 18.6% or maximum 20%. So 20% of the people are contributing maximum turnover, and rest 80% of the people in the NSE exchange are not contributing bigger turnover, and they are mostly an option buyer who are not significantly trading with higher capital and also might not be able to make profits. If SEBI checks this data and concludes, okay, these are the list of people who are trading with lesser turnover and their overall profit percentage is lesser, or their overall loss making percentage is so huge. So based on all this data, if they conclude, okay, the major reason for this is providing an option segment with lower capital adequacy or lower lot size. So that's why they are trying to increase the overall derivative margin or derivative value from current 5 lakhs to 30 lakhs, which is 4 times or 5 times higher. So if this data comes true, definitely there is a high possibility that SEBI might implement this new rule. How long does it take for SEBI to implement this new rule? So currently the committee has to recommend the final recommendations, and then they will be sending a consultation paper, and once they seek all the informations from all the stakeholders, at least it would take 6 to 8 months. If SEBI confirms, okay, we are going to go ahead with this new rule, it would definitely take at least 6 to 8 months to implement it in the live markets. So as a trader, we cannot blame the government, we cannot do anything against them. Whatever the new rules that they are going to come up with, obviously we have to adapt with it. So for over the last 20 or 25 years, lot many regulations has came in, lot many implementation has been done. As a trader, we just have to adapt and evolve. So if you're an option trader, the first thing is, if you're trading with lower capital, definitely you would not be able to trade with such kind of lower capital anymore. You have to adapt to this new environment and you need to increase your overall capital. Only then you would be able to trade in the option segments going forward. So this is what I want to convey in this video. So I'll see you guys next week with another video. Bye.